There we go. Good evening, everybody, and welcome to, yet another masterclass here tonight. So, in this webinar, we are going to discuss something that not a lot of people talk about. So, we're going to take a bit of a closer look at seasonality in the market, specifically how December tends to influence indices and how traders usually interpret this information when analyzing market conditions. So, that being said, before we begin, it's important to state that nothing shared during this session is financial advice, and nothing discussed here should be used as direct instruction to buy or sell anything. So let me just pop this up here as well. So just please take note in that. So the purpose of today is understanding historical tendencies, how traders use these tendencies to format or form context, and how that context is applied when monitoring indice movements during the final month of the year. This session here is about awareness, not prediction. So seasonality is not guaranteed direction. It simply provides patterns that have repeated historically. Our role is to observe, interpret, and respond based on current market behavior. I see we already have quite a few people here. A bunch of people already said hello and so forth. So welcome, everyone. As always, please remember to hit that like button. And if you are unable to comment, please also ensure to hit that subscribe button so that you are able to comment. I want to kick tonight off with a question. Who here in attendance, or if you are watching the recording, you are welcome to pop in the comment section as well. Who here tonight has ever heard of seasonality within trading, or more specifically, if we are discussing December, who's ever heard of the Santa Claus rally? Let me know in the comment section. Would love to hear from all of you. Just as we are discussing a topic here tonight that is, not often discussed, because it's a more in-depth discussion with regards to market behavior instead of just focusing on normal price action. Okay. So let me know, have you ever heard about seasonality within trading? Have you ever heard of the Santa Claus rally? Pop it for me into the comment section. Would love to hear from you. Okay, so let's kick tonight off with what is seasonality. Okay, let's start the evening there. So seasonality refers to the idea that markets tend to behave in similar ways during certain months or times of the year. This happens for several reasons: institutional positioning, portfolio rebalancing, tax year considerations. So normally at the end of the tax year or even mid-tax year as well. Liquidity conditions and investor sentiment cycles. However, seasonality does not dictate the market. It provides a tendency. The key takeaway here is that seasonality is context. It's not a trade signal. It helps us form expectations about probable conditions, not certain outcomes. I hope I'm making sense here tonight. So, when we discuss seasonality specifically with regards to December, December has historically shown a tendency to be one of the stronger months for indices. And this is particularly true in years where market sentiment has been generally stable or upward trending. And for those, that's why I asked the question, you might have heard about the Santa Claus rally. So this refers to the period during December, and more specifically late December, when indices often experience upward movement within the market. So while the name is very informal, the behavioral patterns has been observed consistently enough over various time periods to be meaningful. Again, this does not mean December is guaranteed to be positive. It simply means that over many past years, this has been a common tendency, and for us as traders, tendencies are worth paying attention to. So, let me just see here. No, first time hearing about these concepts or words. Okay, cool. Okay, let me ask this way then. When you hear the term Santa Claus rally, what do you personally associate it with? So, first time hearing it tonight, so what would you associate the term Santa Claus rally with? Would you associate it with optimism, reduced volume or volatility, increase in speculation? You know, it's the festive season. So let me know if we just had to randomly sit there and I would bring up the word Santa Claus rally, what comes to mind? Okay, let me know in the comment section. I would love to hear from you guys. Yeah, and then we'll go from there. Rokos says lots of gifts. Hopefully those gifts are in the form of presents. And when I talk about presents, I'm talking about profits. So, during December, I'm going to refer to all profit taking as presents. So, yes, hopefully those gifts will be in the form of profits. FXB says increased volatility. You're not wrong. I'm going to say that much. You are not wrong. There is definitely increase in volatility in December as well. And the increase in volatility, and we're going to discuss that tonight as well, is primarily due to the decrease in liquidity. So, yeah, again. Yes, agreed. So, when we look at historical index performance over different decades, December has finished higher more often than lower. Hence, the term Santa Claus rally, because of the fact that we have seen historically that more times than not, December is generally a bullish month for indices. However, and this is critical, there are exceptions. For example, there have been periods where December showed significant declines, even after general positive years, which, if we have a look at that, this reinforces a key principle that I keep emphasizing, and I'm definitely going to keep emphasizing it today, that seasonality is a probability bias, not a prediction. If we treat seasonality as certainty, we place ourselves in a position of assumption rather than analysis. Our goal here is to observe conditions, not to force a trade because of a certain month. This is the way it should perform a certain way. A very nice example of that is we just finished the month of October. Now, so tonight obviously we're discussing indices, but specifically when we are talking about cryptocurrencies, October has been known as of late, especially for cryptocurrencies, as Uptober, because the fact that the majority of cryptocurrencies during the month of October over the last 5-10 years have seen a general bullish bias. This year, October, though, was very disappointing with regards to October, and we didn't really have a great October this year, but we also had US government shutdown, which is now officially the longest shutdown in history, and other factors all bundled in. So again, sessions like tonight are informative. They are here to broaden your knowledge base and broaden your horizons, and the fact that we're not just sitting in front of our screens with blinkers on so that we don't focus on anything else. We need to understand everything that can happen within the markets and how that can affect our trading. Now, let's discuss bullish years versus bearish years. Okay, so one of the most important observations is that December's performance is influenced by the overall trend of the year. So if the market has been bullish overall, December often continues that strength. Now, if the market has been bearish, December may still rise, but often it's a bit more of a cautious or slower momentum. This idea reinforces the concept of context-based analysis. So we don't just ask what month is it, we also ask what type of year has it been so far. Seasonality does not override trend, it interacts with it. I hope that makes sense. With that being said, based on your observation, and obviously I know the answer on this is, pretty self-explanatory, but I would still like some interaction from you guys. I feel like you guys have been very quiet tonight. So what would you clarify this year's market tone, especially when we are talking indices? Up till now, would you say it's bullish, bearish, mixed? Let me know in the comment section. I would really like to hear from you. Okay. Roko says, makes sense. I'm happy it makes sense so far. So, this, like I said, we need to broaden our trading knowledge, especially if you want to become a proper professional trader. We need to understand all aspects that are affecting markets. Okay, so moving forward, still waiting for a response though on what you guys think the trend is within the market at the moment. But when we also talk about seasonality, and especially when we are talking about the Santa Claus rally, October and November are months that often help shape December's behavior. Now, October is commonly associated with volatility, market indecision, news flow shifts, or institutional repositioning. And then we have November, which we are heading into now, which often acts as a directional hint. Now, if November closes with relative stability or strength, December has historically shown a higher probability of then continuing that direction. So, but again, I do need to emphasize this, that probabilities are not certainties. We treat October and November as context building month, not as triggers. Now, we have definitely seen a lot of volatility during October. We've seen some repositioning. Now we are heading into November, and hence why I had the session in the beginning of November and not in December, because I want you guys to start monitoring markets, have a look at market structure, and then have a look at how all of this is potentially positioning us going into, December. That being said, I wasn't planning on doing this, but I feel like I want to. I want to pop up a chart. Let me just do this. So I can do this. So I want to pop up a chart here. So here we have S&P. Let's do S&P. It's fine. So if we zoom out a little bit, so I'm going to go here on the 4-hour time frame, and then I want to head back to December, just so that we can have a bit of a look and a bit of a better understanding of exactly how the structure looks and, where the primary moves within December have been. So now you see here, if we do have a look at last year December, from where last year December started to where December ended, it wasn't the most bullish, but I mean also, and I saw a comment earlier about volatility, I remember that. Now if we have a look here at, and this is definitely part of the Santa Claus effect, if I can put it in such a way. So let's do that. So that was basically, there's last year December. Now look at this amount of volatility that, and I mean this is on a 4-hour time frame. So these are big candles, these are big moves, and then you can have this type of drop within the market. Now, obviously last year was a little bit different because just prior to this, so this little up movement that we got here, this was after Trump was elected as president. So, let's go a little bit more back so we can see during times of stability what happened. So I don't know what that arrow was there for. But now, yeah, we can see like this 2023, beautiful example. So if we go here, here we go. Okay, month starts over here. And then moves up to those points. There we go. There's the last day of December. There we can see that very nice rally. But it is also very nice to note here now. So let's look at a little bit of behavior. I'm talking a little bit of a normal here now. So we're talking a bit of behavior here at the moment as well. It is also sometimes interesting to notice that the first week in December can often be very quiet. I mean, look at this. There's week 1 of December. So, not large movements, little bit of quietness. And then as the market transitions from November month end, and then when December kind of kicks in, so anywhere after the 10th, that's where your strong uptrend tendencies historically have often occurred with regards to the Santa Claus rally. Now, this aligns with reduced trading desks, lighter volume, rebalancing flows, and general shifts towards holiday sentiment. So this again does not guarantee an increase, but it provides a window where traders may become more attentive to bullish momentum if it appears. Also remember to take into consideration that at the end of November, there's also a lot of spending that is taking place because of Black Friday. This pushes up earnings for a lot of companies as well. So once that earnings start to reflect on reports and so forth, nice big momentum and moves start taking place within the market, and aka a very, very nice rally that then normally proceeds or follows from there on forward. Am I making sense so far? Let me know. So also let me know, do you typically trade in December? Do you trade more actively? Because obviously a lot of people go on leave during December. So I know traditionally people have a lot more time during December. So yeah, let me know. Do you typically trade more actively in December, or do you focus more on opportunities again later the month or in January? Okay, let me know. Let me see here. So it's been bullish. Okay, that's my question earlier to market movement over the year. Well, from what I have seen, according to my analysis, looks bullish. Then FX Beast followed up. It's been bullish, but for now, it is currently mixed. So current market sentiment is very mixed, not really bullish. And then obviously also stated that everything so far is making sense. I love that. Thank you so much. I do appreciate it. Now, when we are discussing seasonality, this is something that can be useful, but we need to remember that it doesn't override major economic conditions. For instance, in December, we are still going to get a central bank decision. There is still going to probably be major political events. I mean, look at what happened last year. You saw that big spike. This was all based around Trump and things he was saying, So again, that can create issues. And then we also have unexpected news, local or global, that can also drive markets. And again, this year, depending on how long this government shutdown progresses, as I stated earlier during the live that we did for ADP, there can be a lot of volatility in December now because of the fact that there will be so many reports that will be released all together. So all of these can shift market direction instantly regardless of historical patterns. Okay? So it is important to remember we always trade what is happening, not what should happen based on history. If you have a look at the video that I posted today, I had a guest on the Market Brief, James Bruce, and he stated it so very nicely from, trade what is in front of you and not your bias. And that is also my message tonight here is, we should trade what is happening, trade what is in front of you, and not always just, but this is what should happen. Yes, this is what should happen, but this is what is happening, so this is what we are going to trade. But we need to have the knowledge base to know what could potentially happen. I hope that makes sense. We need to remember that price action remains the final decision maker. Okay? So let's summarize a little bit. We've been going now for about 25 minutes. What have we covered up until this point? Just so that we can have a bit of a check-in. So, number one, December has historically shown stronger performance in indices, particularly during years when the overall market tends to have been stable or upward. Number two, the behavior of October and November can provide context for December's tone. Number 3, the strongest upward market tendencies in December have historically occurred in the last 20 days of the month. Okay? And then number 4, most importantly, seasonality is not a guarantee, only a probability frame. Okay. Let me see what comments am I getting. There's a bunch of chats popping up. Only Blues just pop in saying good evening, everyone. FXB says I wait for opportunities. Good. Roka says yes, definitely. Thank you so much. This is such great info, and this December will be my very first time trading that period. Well, that's amazing, because I remember my first time going into December. It was horrible, okay? I nearly stopped trading. But again, because I didn't understand what's all this euphoria and random spikes within the market, and it's not acting the way it should. But again, this is why we have these type of sessions, so that we can provide you with that level of information, so that you don't have to go through all the growing pains that I did in my last 11, 12 years of trading. Only Blues, dance with the partner you bring with to the port. No idea what that means. Does the Santa rally impact gold? Not as significantly as it does indices. But December does tend to impact gold, because the fact that liquidity does thin out a little bit during December, so volatility can increase, and that can create large movements within gold. But because the Santa Claus rally is more based on spending that is increasing profitability of companies and so forth, that there's no real direct spillover into gold. Or let me put it this way, not from what I have noticed. Okay. So let's move on. So now we are all aware. Okay, everyone can now say they are aware what seasonality is, what the Santa Claus rally is, etc. Let's move over now into application. So seasonality helps us to shape expectations, not trades, okay? And confirmation must come from price behavior still. We're not moving away from price action. So it must still come from all of that. So now that we've built our understanding of the December seasonal pattern, we need to shift our focus to how we can interpret and apply this information when watching charts. Okay. So as I've stated a few times during the session so far, seasonality is not a signal. It's a context setting tool. It tells us what conditions have historically been more likely, but it does not indicate what will happen in any specific December. So rather than thinking in terms of December should go up, we should instead approach the market with awareness of historical behavior, recognition of current trend conditions and how that has previously played out, observation of how the market reacts during key weeks of the month during December, and how we can duplicate that going into our current December. This approach will, in essence, keep us strategic and not speculative. I hope that makes sense. Now, one of the most useful concepts for me is the recognition that the first week of December can often provide important clues. Now, if indices appear hesitant or range bound, traders may interpret this as market transitioning or establishing direction. Alternatively, if the market begins December with strength, traders may pay attention to whether that strength holds, fades, or consolidates into mid-month. The goal is not to react on that first movement of December, but to observe them. These observations then become part of your context building process, leading into that later part of the month. As a question, based on the information shared so far and based on your own current knowledge of the markets, when monitoring early December price action, so that first 10 days, what time frame would you specifically focus on? Okay, just because I also want to know how to base my content for you guys going into December, because remember, I'm still going to be here for the majority of it. I'm going to take a break at some point, but I'm still going to be here for the majority of it. So are you going to be focusing on intraday, so scalping, or day trading, or are you going to look at some larger positions that you can hold over the entire month and maybe ride out the entire rally? Let me know. So, okay, so I answered the question about gold, and then there was a follow-up question that says, and is it safe to have long trades on indices if it happens it's bullish for a couple of weeks? This is kind of where my question was going now. What I was stating is, would you guys do your setups in such a way that, you know, you can ride out the entire rally? Are you going to look to scalp every small bounce and wait for a retrace and bounce again? Because remember, a lot of times as well, when there are rallies, there aren't a lot of retracements. So it's just one-way movement, especially if markets can get very bullish. So share that with me so long. And then let's go from it. So Misha says scalping for me. Okay, cool. So intraday spikes. Okay. So I'll see on how I can assist you guys with providing analysis that will assist you on that end. Okay. FXB says I might look for larger trades. It is quite nice if you can focus on the larger trade, and maybe even Misha, this is something you can look at as well, you know, looking for that slightly larger setup, but then as the trade builds, you can scale in and, you know, trade into the month and add additional positions as your liquidity increases and so forth. Obviously, still having trailing stops and so on in place so that you don't take unnecessary losses and you are still locking in profits as the market goes. But, you know, scalping those intraday moves, not for profit's sake, but to build on certain positions. Again, just an opinion. Okay. Roko says, based on the info thus far, what time frame is your focus? Okay, guess he just wrote my question. So, sticking to day trading, so the 4-hour and 15-minute charts. Okay, cool. Again, still day trading to intraday. I like it. I like it a lot. And I will see to on how I can assist, you know, during December with analysis and so forth. Okay. So let's move on to, you know, as we now transition into mid-month. So that middle period, I hope you guys are making notes. I really do. Or you're going to have to watch this again. So that middle portion of December can sometimes feel a bit uncertain. So round about from the 10th to the 15th. this period may include a lot of things such as market rebalancing, temporary pullbacks, or even sideways movements. Now, the mid-month period is, again, not a signal to act, but rather that preparation window. So this is where we're going to be focusing a lot on potential setups for the latter part of December, where, during this period, we're going to study the structure of the index, identify key support and resistance zones that may play a role during the final weeks. So, in other words, this is where we prepare, not necessarily where we chase. Now, that later part of December, historically, this is that strong upward tendency. This is where it tends to appear. This often aligns with lighter volume and holiday sentiment. Now, lighter volume, why? Because banks, hedge funds, these institutions close during December. So people are on holiday, there's no trades taking place, which decreases volume. Plus, during holiday sentiment, people are normally, happier during December. And that positivity normally flows over into markets. Okay. Which, based on the question earlier for gold, that's normally a negative sign for gold when euphoria hits the market. So, as traders, this is where we look for confirmation-based continuation and not assumptions. Okay, so those most historical favorable window, if season strength occurs in that final 2 weeks. So this is where we're gonna, make sure that we are aligned. So if earlier price behavior has shown stability, the final portion of December has historically held the highest tendency for continuation. But notice the phrasing, okay? If earlier conditions support it, we do not assume, we observe on how price responds and then react based on price action. Okay? As a question, for how long are you guys planning on staying active in the market during December? Are you going to trade straight through till New Year's? Or where are you planning on getting off the bus? Okay? Please remember that Christmas Day, Boxing Day, and New Year's Day, markets are closed. Okay? No trading. Nothing. Not currencies, not gold, nothing. Markets are closed. Okay? So, those are 3 days you are forced to stop trading. But on the other ones, how far are you planning on pushing this? Okay? Let me know. Let me see. Misha says, okay, great advice. Thank you. Pleasure. We will petition that you don't go on leave. We need you. People got jokes. How do you manage trading in December with everyone when everyone else is switching off? So, with regards to that, a lot of people, and that's a great question because, a lot of people do tend to switch off during December. But as a trader, I tend to switch off when opportunity within the market decreases. Now, during December, opportunity naturally increases for us as day traders. So instead of switching off, this is kind of a time where I switch on and, plan accordingly, because a good December can set you up for the rest of the year. But we have other months during the year, like September, for instance, which is one of the worst and most quiet months ever to trade in. So also that latter part of August. So normally there, I'm relatively quiet. I don't go overboard. I'll still enter some trades, but that's a lot of times where I get some rest in and so forth as well. And then January again, there are parts where markets are not as active. So there are some times for you to rest as well. But as a day trader, focus on capitalizing when markets provide us with opportunity. I hope that makes sense. I will probably mostly be watching the behavior the entire and enter every now and then if conditions are favorable. Okay, cool. So, getting to the end. So, we need to emphasize the importance of real-time observation. This means that, even though December may have been historically shown higher probabilities of upward momentum in indices or stocks or whatever you plan on trading, price action remains our final decision maker. So how do you apply this in practice? Okay, let's discuss that a little bit. Make notes of the following. These are things that you need to look out for. Reaction at prior highs and lows. We've discussed smart money concepts and price action for about a month and a half now. Okay, we need to look for strength or weakness in trends. Are trends reversing? Are they continuing? Whether pullbacks show absorption or reversal. We need to have a look how the market behaves around key December dates. Little bit prior to December, Christmas, just after Christmas. These can create amazing opportunities. So the idea here is relatively simple. Seasonality tells us when conditions are more favorable for us. And like I said, seasonality is something I want you guys to go and backtest and have a look at, because seasonality is not a December thing. Okay? Yeah, December just has the Santa Claus rally, which is great, but there are other seasons during the year. And if you can start structuring your trades around seasonality, you'll also find that there are times during the year where you can take a break, and you don't necessarily have to take a break when everyone else takes a break. And specifically take a break from trading, because why? Taking breaks from trading during certain seasons can actually save you money. So seasonality is definitely something to pay some attention to. Okay? And then obviously, price action tells us when conditions are acceptable for us to act. Okay? So, some misinterpretations to avoid. Now, one of the most common mistakes traders make is misinterpreting seasonality throughout the year as triggers. Okay? Statements like December is usually bullish, so markets should go up. October is usually bullish for cryptos, so markets should go up. It's December, so I expect indices to rally soon, so I'm just going to start buying now. These assumptions can be dangerous. Instead, the correct frame of mind should be historically. December has often shown upward tendencies in indices. Try saying that 10 times fast. So I will observe market behavior to see whether that characteristic that I know has appeared in the past is going to appear this year. And then we remove the assumption and we trade with clarity. Because now what am I doing? I am waiting for the characteristics of previous years to show themselves. And the moment they show themselves, now I can trade. Yeah. That obviously adds a lot into psychology. So, thinking a little bit about psychology at the moment. How do you, and let's share some information amongst ourselves here so that, we can grow together as traders. How do you personally remind yourself to stay patient during setup formations? Is it journaling that I've been preaching for the last 2 months? Alerts, structured rules. What do you do? Because I know for me, I almost don't know what I do anymore, because I feel that in the last 11 years, I've learned such hard lessons that patience and waiting for my setup is kind of ingrained into my being by now. So it's not really something that I need to think about anymore. It's just something that I now do. I don't enter into trades when the setup is not there. I don't enter into trades when the structure has not appeared, just because the fact that I've been burned so many times that, it's kind of like as a kid. After the 10th time you put your hand on the stove, your brain kind of tells you, hey, stupid, it burns, it's hot, stop touching. So I think my trading has gotten to that level by now. But as newer traders, what do you currently do to try and cope with that? And by sharing that, let's see how we can help other people. Okay. That being said, let's wrap things up. Let's add the bow. Let's see how we can, bring this plane in for landing. Not like the Fly Sapphire plane that, flew very low over Cape Town the last weekend. So here's that final framework condensed into one repeatable process. Number 1, observe how indices behave through October, which we've done now, and now going into November. Why? This is going to set the tone for December. Then what do we do when we get to December? We watch that early part of the month for clues of continuation, hesitation, transition, all these things. Then we get to the middle of the month. So this is where we start building context, preparation, not action yet, context and preparation. And if price action then confirms stability or building momentum during that last part of December, this is where we then look for favorable continuation setups. Still remember that the key word is if. Okay? If seasonality does not, not if seasonality. Seasonality does not guarantee direction. It simply clarifies when we should be paying closer attention to the markets. So it does provide a probability bias, but not a directional certainty. And yes, the strength of the year leading up to December does influence how that month behaves, but observation and confirmation are more important than assumptions. So by combining seasonal context with price structure and momentum interpretation, as a trader, you gain clarity, you gain context, you gain awareness without relying on prediction. Okay. Any questions? Let me know. I'll read what you guys wrote in the comments so long, and then we're gonna start wrapping up for tonight. Okay. I will probably mostly be okay. No, I did read that one. I plan to grab every opportunity arising. Okay, I guess that was the question what I asked. How long are you planning on, being in the markets during December? Only Blue says, wait 10 times. Okay. I do something creative or recreational. Okay. Read some news about the markets or even play a game or two. Nice. I know in the beginning I used to play a lot of Call of Duty late at night while waiting for setups. That was my focus shifter, if I can call it in such a way, where I would play a ridiculous amount of Call of Duty at night. Very happy I had unlimited Wi-Fi. So, yes. Okay. Cool. That being said, it's been almost an hour. Thank you for joining this masterclass. I know this was a bit different to some of our usual sessions, but I hope this information helped you grow as a trader. And also remember that to grow as a trader does not come from memorizing patterns, but from recognizing them in real time and then responding with discipline. Okay. So as we are heading into this final weeks of 2025, stay observant, stay patient, and always let the chart confirm what you are thinking. Okay. Traders, you must have an absolutely fantastic evening further. I'll see you all tomorrow. Please remember tomorrow, live market analysis for the market brief. So that'll be at 11. Looking forward to seeing you all there. Until then, stay sharp, stay focused, trade smart, and as always, keep learning. Enjoy your evening.